authorship. This is what my algorithm's going to do. This is what it's been coded to do. This is what it's going to deliver. Just watch. Versus, we got to wait for our indicator to show us something. We got all our eyes on this indicator here. These indicators, when these things do this, price will do that. That's total bullshit. That's bullshit. Price has no respect with any of that stuff. It just happens to be there. It has no reason, no rhyme behind why price is doing that. I'm serious. I mean, it's just the way it is. I know it feels like it. It feels like it's got some kind of sorcery hold over top of price, and it's going to make it do something, walk it on a leash. It has absolutely nothing to do with it. VWAP is a fucking joke, myth. It ain't real. It's just in there just like any other thing. A stochastic divergence. You can find thousands of times where a stochastic divergence didn't do shit for price. It just kept on going. Impulsiveness stems from the lack of knowledge of price. You have to understand the central tenets of price delivery. That takes a lot of time. You can't rush that. It's not like you can go out there and buy technical analysis from A to Z book and think you figured it all out. I owned that book, by the way. I thought I was going to figure it all out when I was 20 years old. I had to buy that book there. And oh, wow, all this is a small little snapshot of this is an indicator. This is what it's used for most. Okay, well, now I know how to use it. I didn't know what I was doing. And what I was placing my interest and focus and time studying was things that was manipulating price. Think about that. That's what these indicators are doing. They're taking data that has already been delivered in price action, and they're applying mathematics and equations and compressing and contorting and torturing that data to spit out some kind of, here, look at this. Instead of, where's price going? How is it delivering right now? Was there any manipulation recently? Was there any stops rated while you're expecting it to go higher? Did it trade down into an inefficiency while you were expecting it to trade higher at a time of day when you expect it to run? There's a difference between what it is I'm trying to teach you to focus on versus everybody else's stuff. I'm not trying to take your attention away from price. I'm taking your attention right to price, but specifically at the right time. My algorithm delivers on time and price. It will not do anything but, unless manual intervention steps in. That means the powers that be said it wants to go here, it will go there. And it will do it in short order. And it will not respect your stop loss. It will not allow you to get out at the stop loss price. That's a trade that you were in. If you've ever endured that, you experience manual intervention, because the algorithm will not spool like that. It's not delivering price algorithm when it does that. That's manual intervention. That's risk. That's the thing that everybody has to understand about. Every instance, every single trading session, every single trading day, every instrument that's tradable is open to that risk. Excluding that, and you never know when it's going to be there entirely. Generally, there's times, around the economic calendar, you can anticipate that. I've taught that. We've talked about it before. I'm sure there's going to be people that's going to mention, okay, well, we'll talk about it now because I didn't see that video. No, watch the video. There's no shortcuts here. You're an asshole, ICT. That's okay. That's your opinion. I'm a prick. I'm not an asshole. The lack of knowledge about price and its delivery, you put that to bed when you study conceptual ideas. Things like my core content mentorship playlists, month 1 through 12. Things like the Market Maker Primer playlist, the 2022 mentorship playlist, the Silver Bullet, the TGIF. You're bringing yourself closer to the general idea of what price can do in certain instances. What you should do with that information is determine how you feel drawn to certain aspects of what it is that the market does. Are you a type of trader that likes to go against everybody else and go against the market? Don't fight that. You're contrarian. That's all that means, that you're a contrarian. That means that you have to wait for instances where the market's literally just careening higher or lower, and you're comfortable fading that. And you can make lots of money doing that if you know what you're doing and you're waiting for a specific thing to occur in price. Now, admittedly, that's one of the hardest things in trading. So as a contrarian, you're wired way different than most people. But I have a way of teaching that you can take that contrarian mindset and apply it to any time frame with a very specific model. 2022, the fair value gap, silver bullet idea, they're all contrarian. No, they're not. They're trend following. No, they're not. They're whatever you want to encapsulate at that moment in time. If you cut enough of the candles off to the left, because we don't have to look left to see what price did all the time. We just need to know what time is it. Where's the draw on liquidity? Remember those times that I would share on Twitter? What do you see? And it'd be a small little section of price action. And invariably, somebody would come through, there's not enough data here. This is ridiculous. Really? Encapsulate the entire hour of 10 o'clock and 11 o'clock in the morning, New York local time. I was doing things just like that. Smart guy. All that stuff is there for you to narrow your focus into what you're going to be drawn to as a trader. Are you a reversal trader? Contrarian? You fight against the trend? Okay, that's inherently ingrained in your personality. I can't fix that, and you're not going to undo it either. So you might as well find a way to apply that to price action, because price action is not going to bend its will to you. It's not going to say, you know what, Andy just started trading, and this guy's really strong-willed. I'm going to bend to his will. You know, who am I as price? The markets themselves. How am I going to, continue doing what I'm doing and not give it to Andy? That's not how it works. But it's weird how some of us come into the marketplace, neophytes, brand new, and we think that, you know what, I'm going to whip this shit's ass. It's going to be easy. It's going to bend to my will. I'm going to conquer it. I'm going to master the market. Let me tell you something. I wrote this shit, and I'm not the master of it, because anybody that's in a seat of authority higher than me can go in there and push a button, slide a little thing over here and says the price is going to run higher than you thought it was going to go in the opposite direction. That's manual intervention. That is not me moving my stop too close, too fast, too soon, and getting stopped out. That's an error on my part. That's an error on your part as a trader. I'm talking about where you're in a trade and all of a sudden it's going 50, 75, 100 plus candles, just like that. That's not an error in trading. That's you getting ran over by a Mack truck and a convoy's behind it. And it just keeps and over and over and over again. You're getting ran over. That's the risk in these markets. Every single time you get in the marketplace, that is there. And I've been telling all of you, we are going to see some wild ass shit in currencies. And I am not opening myself up to that risk. That's the reason why I'm not trading Forex. I didn't forget how to trade Forex. I don't think that what I'm saying here is saying that Forex is not favorable or can't be profitable, because I have students and you see other people in other school of thought that they're making money trading Forex. I'm not personally accepting that level of risk because it's going to be violent. When the Swissy and the Euro were depegged, we're talking about that. You can't survive that. I can't survive that. Brokerage firms didn't survive that. It's, that's an extinction level event in trading. But you have to understand that that's always there. That risk is always there. And stop loss orders will not protect you from that. Putting that aside, you have to know what the normal delivery of price is. When does the market usually have a spooling event? That means where it starts to run in one direction. It doesn't need to be fast. It doesn't always have to be a low resistance liquidity run where it's here 1 minute and then a couple minutes later it's already up 50 handles. It just means it starts to go into a specific buy or sell program. That's not a buy and sell model. A buy program is when price or institutional order flow just starts delivering higher prices. It doesn't matter how many people are buying it. It has absolutely no fucking reason why price is going up. Doesn't matter how many contracts or buyers or sellers are coming in. It's being offered continuously. That's a buy program. It's going to just keep offering at a higher price. Keep hiring, higher. And it just keeps doing that. When markets move up, they're in a buy program.